In part 1, we talk about the breakout trading methods. Here is the video about the examples. In the end of the video, I will present how I use alternate approach to trade breakouts. Now, you might be thinking, if breakout patterns are so easy to remember, why isn't everybody succeeding in this? The real question is, are breakout patterns posted out there for your benefits? The answer is, it depends on how you use it to your advantage. Now, let's go to the examples.
Marksman Capital Presence.
Okay, so if we look at this chart right here, it's trending upwards, and one of the most common pattern we can see, and by far the most falling pattern in an uptrend continuation, is one of the most common pattern, and you see that in the many charts that I will show you right here. Right, so this is also, I'm actually including some of the weekly moving averages to see, to let you see some of these patterns sometimes can be formed after the price action has been actually overstretching from the 50 moving average, and as this price is actually resting, and as it hits the 50 moving average, then it starts to continue its upward trend. Okay, so but this is just one of the examples. It doesn't happen all the time. And let's say, for instance, this is also what we call a falling pennant. And what you can see right here, you can see that there are actually a confirmation of even volume. It doesn't happen all the time, but as long as you see a candle that is actually huge and breaking upwards the significant resistance, and that's where a lot of buyers are buying in to this breakout. And also this retraces down here to the resistance, turns support, and then it rallies. All right, so so here's one more example, higher than average volume. I don't always use volume, but this is just one of the example. And this is also a falling pattern in an uptrend continuation. So let's see more. Here, again, you can see there's a breakout pattern right here, and you can see confirmation of volume spiking upwards. And this is a falling wedge in an uptrend continuation. And where we are using weekly candles, so this can be actually even half a year that this can be consolidating when it fully forms a falling wedge in an uptrend continuation before it rally upwards sharply. All right, in Amazon, this is also okay. When I use breakout patterns, you will notice that I'm actually using these patterns in if I want to go long, uh, I'm using these patterns, this fundamentally strong stocks, and also looking at these patterns at the same time. Sometimes even before these patterns are fully formed, I've already bought into the stocks in the earlier stage before it breaks out. But how we do it, or how I did it, then I'm going to show you in some of the examples at the end of this slide. So again, this is a falling pennant in an uptrend. Okay, of course, you can see some small patterns were formed in the later stage right here. Then bull flag, bull flag, bull flag. Okay, again, this is shown earlier, McDonald's, but it's okay. This is about the volume that I would like to show you. Confirmation of volume, then it starts to rally after that. Again, falling pennant in an uptrend continuation. This is also another McDonald's chart, and this is somehow a bullish ascending triangle in an uptrend. And of course, these patterns are not really that perfect. It doesn't just go this way, then it starts to form a pennant. All right, uptrend pennant continuation. So this starts to go down a little bit further before it forms a pattern right here. Okay, pretty recognizable. Abbott Laboratories, strong fundamental stock. We can see a falling pennant right here sorry, uh, broadening wedge, and this is quite rare. We don't actually find this all the time. But if we do find it, it does. If we combine this with strong fundamental stocks, it's also it's a very high probability. And this broadening wedge right here, you can see that there are huge spikes of volume when this candle gaps up. Okay, that maybe we can actually zoom in a little bit right here. You can see there's this volume higher than average volume when there is confirmation that this is breaking out from the diagonal resistance. And this comes even after a huge volatility. And this is like when the market says, all right, we are committed to bring the market upwards, and this is where it starts to break out with confirmation that it retraces a little bit, then it starts to rally. Again, when it starts to rally, then it doesn't go into a straight line at times, then it starts to go into another consolidation again, and it forms another pattern right after that. Again, a falling pattern in an uptrend continuation. And if we look at bullish stocks and these patterns, sometimes they keep occurring in the chart. Symmetrical triangle, bullish flag, ascending triangle, bullish flag, falling pattern, ascending triangle. It keeps repeating and repeating, and many multiple patterns in a same single chart. I mean, in the same stock, right? So let's say if we look at McDonald's in the bigger picture, then you can see multiple patterns are formed. Then Microsoft, all right, Microsoft, multiple patterns are formed. Sorry, multiple patterns are formed. And Mastercard, also one of the strong fundamental stock. And this is broadening wedge, also in an uptrend. So, and you can see again when there's a confirmation right here, confirmation when it breaks out and then it starts to retest very near to resistance. Sometimes it goes down a bit lower before it starts to continue uptrend. So this kind of stocks, if I'm actually investing, then I would actually average down. Maybe I could buy somewhere here, I would buy somewhere here, then I would buy somewhere here. So a few stages before it starts to rally again. So this takes around, let's see, October, well, half a year to form this pattern. Sometimes patterns can take long, even 1 or 2 years in some cases, or 1.5 years, sorry, 1.5 years, depending on what kind of pattern. So you see more on that. So here are strategies, rules to trade breakouts, like I presented earlier. But now we want to, yes, flashback a little bit to a normal approach. Then we'll come to alternate approach. And the common approach is what I've showed you in the part one, where the target profit for a particular pattern like this bull flag is to actually from C to D is actually a reflection from A to B. So D is your target profit, and usually traders would start to enter uh, once there's a breakout, a full body breakout in this candle right here. Okay, then okay, the target profit, like we say just now, is D. So it's pretty straightforward. This is for momentum traders. I don't usually trade this way. So these are actually taught in the markets that commonly traders should trade like this. And traders is like some traders, even they come in a bit late stage. They come in over here and they start to chase the price onwards here because they see this pattern right here is very obvious. It's a bull flag, and they start chasing even after 1 or 2 confirmation candles. So as a trader for a long time, I don't actually chase candles right here. My buying point won't be here. You see that in the later part. So let's say now breakout patterns don't have. I mean, don't really. It doesn't work out for everybody, and here's why. And this is one of the example right here. Now, for instance, this is a bull flag, and sometimes most people they have when they enter upon this confirmation candle, their profit targets can be very far away. Okay, can be very far away. Let's say this is the entry, probably the stop loss It depends. Some people want to put a stop loss right here, and this is like 1R to them, one multiple. Then they need to stretch it out to 2R, which is higher than this profit target. Somewhere between here and here, where they actually place their stop losses, right, which is a sell order. So it could be any of these levels below this resistance right here. So many of the different stop losses were placed right here. And of course, the smart money knows that, right? And smart money are the ones who turn and churn the prices. So this is what we see. What I see in most times. Well, there'll be like shakeouts. The first big red candle comes down, then after that, there's a second flush down candles to shake out even more traders. And this is where this candle starts to take out a lot of stop losses. And then what we'll see is that we'll see volume starts to spike up even higher than this volume right here, this volume candle, higher than the confirmation candle. This huge red candle has been taking out a lot of stop losses, and that's why it's recording a lot of volumes right here. So and then another candle comes in, taking out more stop losses, forms a reversal candle, then it starts to rally again. So like, if I would trade breakout patterns, but I don't frequently take breakout patterns or temporarily failed breakout patterns. That's when I'll take it, right? After this candle. And this is how I set up my trade. All right, my entry is right here. Then my stop loss is below this candle, right, which is lower than the wick. Right here, lower than this wick right here. Okay. Then you know, then I'll set up my 2R and 1R. So my entry points are actually even before this. Let's say if I would take the trade, I would take entry points like this and temporarily breaking downwards here of this support, and there must be, or they yeah, there must be a minor flush down like these candles right here in order to see an entry. But of course, ideally, most of the time, I like to see huge shakeout patterns coming down right here, right after the bull flag comes down right here. So I'll show you one of the example right here. And this is one of the strong fundamental stock, which is Service Now. And this is a falling pennant. And you see, there's a breakout. There's some volumes rushing in, chasing this pattern. Uh, then it starts to rally after that. And sometimes even before reaching the profit targets, when these traders are still, some of the traders, they chase this rally right here. They enter a bit late, and their stop losses could be somewhere around these areas. So what happens next? So the next thing you know, then there's a huge flush down, taking out a lot of stop losses, and this is going to be, you see, this is volatile. You can see that these candles right here, the red candles, they have huge gaps down, huge gap down, and another huge gap down, huge gap down. Almost you can see this is waving upwards around 45 degree, and this is going downwards maybe 80 to 90. Okay, sorry, 70 to 80 degrees sharp downwards, and taking out a lot of stop losses, and it will choose either one of these key support before it reverses one of these, or one of these key support. It can also go down here before it starts to rally on the later part. So one of the example, this is quite simple, but they are also the ones that are quite complicated. Now let's say, for instance, Amazon is strong fundamental stock. It has been rallying for some time, and also right now it has been consolidating. And breakout traders, what they like to do, once they see some resistance right here, and this is where they start to draw, okay, there's a key resistance there, and they can see that there's some support also ascending. So they call this ascending triangle. So there will be traders drawing these two lines here, and which is very obvious. Amazon right here has a very recognizable pattern, right? And the price has been hovering above the 50 moving average. So then the price starts to slowly break out of this resistance, which does not have a lot of conviction at this moment. So because the candle is not fully out or more than half of the body, so you can see volumes are not there. Then the next candle, all right, not a lot of volume, but this is also where it attracts a lot of breakout traders. A full body out right here, a full candle body out from this, a full candle out from this pattern, this resistance. So therefore, there will be traders coming in and chase. So they'll once they chase this pattern, then they'll place their stop losses right around these areas. All right, these are the clusters of stop losses right around those areas. Then okay, for over 1 or 2 weeks, prices remain above this resistance, and but then the price didn't actually rally after that. So it stays around here, but there's a lot of stop losses right here. Then let's continue. So then, bam, you see two candles right here, flush down, taking out a lot of traders, and most of the breakout traders starts to say, hey, now this is very near to the diagonal support, and if it breaks downwards, I'm going to turn my trade to short sell the market if this fails. So there's it's like, it's coming back down, and it's likely gonna fail. That's what most traders will think. So the next thing you know, then there's a breakout here, right? There's a breakout there downwards, and this is where a lot of short sellers come in and they say, "Come, let's sell this, sell into this pattern." And there's a lot of short sellers coming in, but this is a strong fundamental stock, and you can see that the volume is driving to upwards right now. There's a lot of traders coming in because the pattern is very obvious. And what happens next is then the price was taken up. So you can see that there's a doji candle over here, which means there's no it's undecisive, but actually the bulls are coming in. So the bulls, they come in, and actually what I call this is actually a bear trap. So it's a major one. And this is slowly, you can see that it's slowly being bought upwards. This candle, yes, has been a huge volume buying up because there were a lot of short sellers. So there's a huge volume. If I go down a little bit, you can see that volume spikes up here. All right, volume spikes up at this candle right here. Then slowly, it's giving more time for the short sellers to come in. Then they slowly buy the price upwards as short sellers are coming in. But the thing is that this is closing up again the diagonal trend line, and this few candles right here has been actually collecting a lot of short sellers. So where would short sellers likely put their stop losses? Place. This is where they'll place their stop losses right here. And what is their stop losses? Automatic buy orders. All right. So they're trapped in okay, this is what we call a bear trap. So they're trapped in this trade right here, and as soon as one of the candle closes upwards here, and they'll start panicking. So they'll start panicking and will hit their stop losses, and the price would actually explode upwards from here. And from there we can see, all right, now many traders, they will recognize again this is a false breakout downwards. So it's like the price is like zigzag, breaks out, comes back, breaks down, comes back, and leaving people confused and panic a little bit right here, or very panicked, not just a little bit. Right? Even the short sellers now are panicked, so they have to close their trades in panic. So you can see that again, the next week when the candle opens, then there's a huge spike upwards, and this is where this is the beginning of a short squeeze. So short sellers are squeezed out over here, panicking. They're covering their shorts right here in panic. Right. For those who have not set automatic buy orders or stop losses, so they cover their shorts right at this candle in panic. Right, cover their shorts in panic. So that's why you see there's a huge spike upwards, providing momentum for this upward breakout. Is also a confirmation where bullish traders starts to rush in, and this is where bam, right, bam, huge spike upwards again. This is continued by having rally chasers coming in and a huge short squeeze. So providing a lot of liquid those who want to take profit right here. And of course, later after that, the price starts to consolidate again before the next rally. So this is a bit more tricky, more moving parts, you know, and this is really keeping trades interesting also as well. Lots of manipulation going on. All right, so that's where I would like to stop before it gets too heavy. Striker X here. Happy trading and investing. I'd like to sign out and hope you enjoy this video. If you like this video, please hit the subscribe and like button, and also notification button if you like to get more of these videos. And we will provide the link below in the description column.